Ladies and gentlemen, good day and welcome to the Q4 FY'25 earnings conference call hosted by Hi-Tech Pipes Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anish Bansal, Whole-Time Director, Hi-Tech Pipes Limited. Thank you, and over to you, sir.
Good afternoon, ladies and gentlemen. It's a pleasure to welcome you to the Q4 and full year FY'25 earnings call of Hi-Tech Pipes Limited. I'm joined today by Mr. Arvind Bansal, Executive Director and Group CFO, and Mr. Arun Sharma, Company Secretary and Compliance Officer. We are honored to connect with our esteemed investors, analysts, and partners. Let's dive straight into what has been an exciting and milestone-filled year for Hi-Tech Pipes. We closed the fourth quarter FY'25 on a high note, with significant growth across all performance indicators. The revenue climbed 7.74% YOY to 734 crores, fueled by strong momentum in infrastructure and construction sectors. Sales volume rose 8% to 1,16,032 tons, reinforcing our leadership and execution strength. Net profit surged an impressive 58%, reaching 17.63 crores, thanks to sharp cost control and high-margin products. Annualized, this fiscal year was truly transformational. Revenue jumped 14% YOY to rupees 3,068 crores, our highest ever, supported by record sales volume. Sales volume soared 24%, reaching 485,447 tons, a new benchmark for the company. Profitability improved significantly, with PAT rising 66% YOY to rupees 72.95 crores, driven by operational excellence and improved margin. Now coming to the financial health, net working capital days shrunk down to 52 days from 63 days, enhancing liquidity and reflecting better operation control. Return on capital employed has improved to 14.34% from 13.7%. Debt to equity ratio has reduced to 0.15, and importantly, credit rating upgraded to A+, a strong vote of confidence in our governance and financial discipline. Now coming to the operational highlights, let me now take you through some of the key operational achievements of the company this year. Hi-Tech Pipes is proud to support two of the nation's most critical infrastructure initiatives, the first being the Indian Railways Kavach anti-collision system, where the company is providing high-quality steel pipes for its safety. Recently, the company has procured orders from Border Security Force modular multi-layered high-strength border fencing. The growth from Sanand Unit 2 is now a global supply hub for solar torque tubes, vital for solar energy infrastructure, serving markets across North America, Europe, and the Middle East, delivering high production efficiency, scale, and exports, a new symbol of our Make in India, Export to World strategy. Additionally, we have successfully commissioned a new hot-dip galvanizing facility at our Hindupur plant in Andhra Pradesh, enabling us to meet growing demands for corrosion-resistant steel pipes. In the last year, we have launched several new SKUs, notably the large diameter hollow sections such as 250 by 250 and 300 by 200. Now coming to the project implementation progress, the greenfield plant at Secunderabad is under advanced stage of commissioning. The unit is a pivotal part of our roadmap to achieve 1 million tons of production capacity by FY'26. The facility will produce specialized ERW steel pipes catering to infrastructure, defense, and renewable sectors. Secondly, the brownfield expansion at Sanand Unit 2. Our Sanand Unit 2 expansion aimed at serving infrastructure and energy sectors. This is in line with our strategy to enhance value-added products offering while optimizing the existing plant ecosystem. Now coming to the branding. The company has amplified its brand awareness through various projects. For example, Mahakumbh in Prayagraj and the enhanced visibility at all the Gujarat and UP airports. Additionally, robust grassroots campaigns through dealer signages, wall paintings, and local activations. With robust tailwinds from infrastructure, defense, clean energy outlook for the steel pipes is bright, we are fully aligned to achieve our long-term vision of 2 million tons installed capacity by FY'29. Backed by the strategic initiatives, fundamental strength, and execution excellence, Hi-Tech Pipes is geared to deliver sustained value to all stakeholders. Now we may open the floor for questions.
Thank you, sir. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets when asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Vikas Singh from Phillip Capital. Please go ahead.
Good afternoon, sir.
Good afternoon, Vikas ji.
Yeah. So just first question regarding my FY'26 volume and EBITDA per ton guidance, as well as the value-added mix which we are targeting.
Sir, for this year, we have done 485,000 tons, net sales volume, and FY'26, we are targeting upwards of 6 lakh tons, 600,000 tons. And the EBITDA should range from 3,500 to 4,000 rupees per ton for the full year.
Understood.
The value-added share, right now, we have closed this year at 38%, and with the new facilities and the recently installed galvanizing facility in Hindupur, we should be around 42 to 43% by end of FY'26.
So, giving your guidance basically, so shall we assume that the 1 million ton capacity expansion is coming in the first half itself? Otherwise, that 6 lakh ton of volume would be difficult to.
Yes, sir. So it is on track. We are in very, very advanced stage of, commissioning, and the trial productions will be starting from the upcoming quarter.
Understood. So my second question is regarding the net working capital days. It was basically came down to almost 49 in the FY'23. Since then, it's increasing. Given we are going to push more volume, so how should we look at this net working capital days? Would be flattish, or you expect it to come down, and by how much? If you could give us some idea regarding that.
So, sir, this year we have come down from 63 days to 52 days. So there is already an improvement of 11 days, and going forward also, I think there should be further improvement in the net working capital days.
Understood. So lastly, on the competitive intensity, almost everybody is putting identical products, and we have seen that couple of large players have seen some margin push, basically, or competition in the common segment. So how is our thought process regarding that? And because we are also talking about EBITDA per ton improvement. So can I ask that what is the EBITDA per ton in the April or May, if on a monthly basis as well?
Sir, this is a ongoing quarter, and with this we are in the middle of this quarter, but it is decent right now, and we'll have to see how the next month or month and a half looks like. Coming back to the competition, and so we are confident of adding 25% sales volume every year. So that is our main target, and in the last many years we have focused there, and we have been able to achieve that. So, because of new products, geographical expansion, product expansion, and through marketing strategies, and, companies already doing, well in exports also. So, combined, so market is there for us, and it is more about execution.
Understood. So just one last question. Gensol was one of our customers. So do we have a major exposure to that, or it's a minor one and we should not be worried about any bad debts?
Sir, yeah, one of their subsidiaries was, our customer, for, solar, for the solar segment. And yes, that volume, that volume, there was an impact, but it's not a significant in the overall, scheme of things. And within solar also, it was less than 10% in our solar, solar customer profile. So it's not a big impact.
Understood. That's pretty reassuring. Thank you, sir, and all the best for future.
You're welcome, sir.
Thank you. The next question comes from the line of Krish, an individual investor. Please go ahead.
Hello, am I audible?
Yes. Hello, Krish.
Hi, thank you for the opportunity. I just have two questions. So the first one is, if I look at the steel tariffs, similar tariffs, were imposed by US back in 2018. And
Right.
there we saw kind of steel prices crashing after that. Like there was a spike and then they dropped down significantly, and all the steel players were affected really badly, especially with China dumping them in the global market. So given the similar scenario now, are we optimistic about the quarters that are coming forth, or do you see something similar playing out?
Yeah, Krish, so you are absolutely right. They were because of the steel tariffs imposed by US, like for the, worldwide steel mills. This is definitely a concern. But, the Indian government proactively, they have introduced a safeguard duty of 12% on imported steel. So there is an insulation from these global shocks. And what import was coming like 1.5 years ago. So import has, come down quite drastically in last 6-8 months. And this duty is for 200 days. And if the findings are there, then this will be extended to 3 years. So we have this insulation of external price shocks.
Got it. But largely this 12% duty, is this considered to be sufficient by the market? And was a similar thing not there in place back in 2018?
No, that time it was not there. And, this 12% is on top of the, the custom duty, which is 7.5%. And then there is a cess also. So all in all, it becomes 21 to 22% blended, which is a significant deterrent.
Got it. Got it. Okay. And these things were not existing back in 2018?
No, not at that time.
Understood. And the last question is, so we had projected for a volume of 5 lakh tons for FY'25, and judging by the first 3 quarters, it was going quite well. So, why was there sort of a slack in Q4 in terms of volume?
So, as Vikas had mentioned, there were orders from this company, which was a subsidiary of Gensol, where we had these orders in hand. But then we had planned for these order execution, but it did not happen in this quarter. So there was a small, deviation there. But overall, if you see, out of 5 lakh tons, so we have done 4,85,000 tons. So we are like, very, very near, and because of this issue, there was this, loss of little quantity. Otherwise, we are on track.
Got it. Got it. So just to confirm, due to these tariffs, we are not looking at reducing the margin guidance in any way?
No, not at all.
Okay. Okay. Thank you. Thanks a lot. All the best.
Thank you.
The next question comes from the line of Sagar Shah from Spark Capital Private Wealth Management. Please go ahead.
Good afternoon, sir. and thank you for the opportunity. My first question is related to our CapEx plans. We have already around 190 crores in capital work in progress, and we are commissioning a new greenfield plant at Secunderabad and a brownfield expansion in Sanand Unit 2 phase. So, I understand that you have given the figure that we'll reach 1 million tons of capacity by FY'26. But can you throw some light at what exactly is going to be the capacity from 7.5 lakh tons to, can you specify a number? And secondly, can you suggest a timeline that is the capacity expansion already over, or will it get functional by Q2 or Q3 FY'26? That is my first question.
Yeah. So regarding the CapEx plans, so we have, the ongoing CapEx going on at Secunderabad, which I mentioned in my speech, and the Sanand Unit 2, Phase 2. So these are
Right.
under advanced stages of commissioning, and very, very soon we'll be announcing, the trial production at both the facilities. Along with that, new facilities at Sri City in Chennai, that is already, the ground development work has started there. And the Sanand Phase 3 of Unit 2, that is also, under start. So by end of this financial year, we'll be at a 1 million ton capacity, and we'll be on another 25-30% capacity increase in FY'27.
Okay. So basically 1 million tons, that is including the Sanand Phase 3 and the Sri City expansion, or without that?
No, without that.
Without that. Okay.
Yeah.
So we'll equate to around 1 million tons to be precisely, along with all the capacity, the entire capacity that you're talking of, including the Secunderabad, Sanand, Hindupur and Khopoli, right?
Yeah.
Okay, sure. My second question is related to your guidance that you have just given of surpassing 6 lakh tons of capacity. So, what are the drivers for that? Are you expecting some more client addition into your bouquet, such as more solar power companies, or maybe some more real estate developments? So what exactly are the drivers for increase in the volumes actually for FY'26?
Yeah. So, Sagarji, so there'll be an improvement, in the sales. This is not the capacity, actually, these are the net sales volume, 6 lakh tons. So 1 lakh ton additional sales, and we'll be selling this through our existing distribution channel. And there is sufficient demand for our products. You mentioned solar being one of the major ones where the growth is coming from, and we have a very strong focus on this segment. And also because of our geographical reach, we have been able to penetrate in this market in a very proactive manner. And apart from this, I mentioned, so railways is also a big, lot of new requirement and demand is coming from the railways also. So this is also, helping the company in the higher volumes.
Okay. Okay, fine. And my last question is related to our OpEx actually for this quarter. And the other expenses, it came by almost half actually in this quarter at 14 crores as compared to 28 crores last quarter. So where was the divergence so much actually? In just a matter of 3 months. Can you explain the difference?
Yeah, Arjunji going to answer this, please. Actually, in the other expenses, in quarter 1, 2, and 3 are the limited reviews, and this quarter, this is the final audited number. So, in the year end, some adjustments is always there on full year basis. So one reason is this, and second is as we are expanding our capacities, so some capitalization of expenses is also there, which has been accounted for.
Okay. So, capitalization that led to reduction in expenses.
Actually, in earlier quarters, it is only a limited review. So, year-end adjustment is always there, which is being reflected in Q4 and being the balancing figure of the year-end. If you see on year-on-year basis, our other expenses numbers are at par.
No. Last year also, other expenses was at 28 crores, no? It was.
I'm talking about full year numbers. On full year basis, last year was 90.50 crore rupees, and this year it is
that is the same.
90.70
Yes,
crore.
that is the same.
Yes.
Yeah, correct.
Okay.
Thank you, sir.
Thank you.
Okay, fine, sir. Thank you, sir, and all the best.
Thank you.
The next question comes from the line of Radha from B&K Securities. Please go ahead.
Hello, sir. Thank you for the opportunity. So my first question was...
Yeah, good afternoon, Radha. Radha, can you be a little louder, please? I can't hear you.
Yes, sir. Is it better?
Yeah.
Yes, sir. So year-on-year, our volumes have grown by 24% on a full year basis. So I am assuming similarly, our raw material procurement would have gone up in the same range. So with this kind of a growth, what is the incremental discount per ton that the company is getting in terms of raw material procurement in FY'25 when we compare it with FY'24?
Yeah, Radha. So, this, bracket where we are operating right now, it is more or less the same. But, after this, after the company, becomes like a, 7-8 lakh ton player, then there'll be a significant difference in the costing per ton. So, right now we are in the bracket where, the slabs are the same, but as we move, upwards of 6.5-7 lakh tons, then there is a, additional change there.
Sir, any numbers if you can give on a per ton basis, what would be the estimated discount post we reach that level?
Rather, that depends on several factors, the market conditions and everything. So that will happen, when it happens. So I think FY'27 is the right period, and it is, like now it's almost a year and a half away. So we are focusing on the current financial year, but of course, the higher volumes is part of our costing strategy also.
Okay, sir. If we talk on the basis of index numbers, suppose now we are doing 4.8 lakh tons of volume, and if you get X percentage of discount. So when we cross that 7 to 8 lakh metric ton of volume, so can you give some kind of an indication what would this X become at those levels?
Sorry, I did not hear you. After 6-7 lakh tons?
Suppose now at current volumes we are getting X percentage of discount. Mm-hmm. Now when we cross 7 to 8 lakh tons of volume, what would this X percentage become at those levels?
Rather, there is you can take a range of 200 to 400 rupees per ton. How and it will play out. That will depend on the market conditions also.
200 to 400 at what level of volume, sir?
On a 7 lakh ton.
Okay, and post that when we cross 1 million ton?
Yeah, so in the same percentage. Okay. Proportionately.
So actually, yes, sir. So thank you, sir. That was helpful. So secondly, basically, I wanted to understand if the competitor's procurement is 6 to 7 times of Hi-Tech, then how will this discount work? Will it be solely based on volumes, or will it be similar to the largest player, or will it remain the same for all?
So there are freight factors also, the landed price also. And, the mills, there is one slab that is the, highest slab, it works out. There is one after a certain threshold, the discounts are maximized. So at a 1 million ton level, all the players are more or less in a very, very similar range of costing.
Okay. What I understood is at 1 million ton production, the raw material discount would be similar for all the players, and there is a certain threshold post which the procurement or discount would increase for those players.
Yeah. So discounting becomes very, very, very similar at that level.
So, sorry, sir, just a confusion. At 1 million ton, it is similar for all players.
Yes.
And what is the threshold post which it would be higher for higher volumes?
So basically what I've told you is at 1 million ton level, so the pricing structure, the costing structure and the discount structure is very, very, similar for all the players at 1 million ton.
Okay, understood.
Yes.
Thanks and all the best to you.
Thank you.
Thank you. The next question comes from the line of Pallav Agarwal from Antique Stock Broking. Please go ahead.
Yeah, good afternoon, Manishji.
Yeah, good afternoon, Pallavji.
So first question is, on this purchase of stock in trade. So this quarter also it's pretty high, about 75 crores. So what exactly is this? Like, is this more of a trading business or what is the nature of this?
But this is not trading. Basically, these are some inventory that is stuck with the company, some odd sizes, some odd widths are there, some material defects are there. So this is the sale of, those items. In the overall, scheme of things, it's just 5 to 5.5%. It's not a significant number.
So will this sustain or, every quarter, or this is more of a one-off?
So this is ongoing and, this has been ongoing for several years and it is across the industry. So there are a lot of, stuck material which needs to be liquidated on time.
Okay, so this is something that we produce, or is it something that, we've purchased and we've got stuck with it?
Both.
Both. Okay. Okay. So the other thing is, just on the broad market trends. So now post safeguard due to HRC is again gone up. So is there more competition from Petra pipes now, given that the premium has gone up again?
So no, actually, there's a lot of market, distinction that has taken place. So Patra players, they have formed their own market and, the branded players and the organized players have their own market. So, it's not, a big, impact. So as you've seen, we have done, higher sales of 24%, volume-wise. So for us, we are finding our new markets and new products and, cutting edge products. So that's not a big issue right now.
Sure, sir. So also just on, if you could just tell us, what are the warrants outstanding and, how much of money can probably come in, whether it'll come in 26 or, 27?
Sorry, can you repeat, please?
The warrants, what are the warrants? And are there any
Volumes?
Warrants, share warrants outstanding?
No, there's nothing pending for conversion.
Okay, so everything is converted.
Yes, sir.
So there'll be no more dilution then going ahead.
Yes, sir.
Okay, sir. So great. So just lastly, so I think this year because of the QIP, I guess we would have ended with a net cash position right now, right? So I don't think we would be having any debt on our books, including working capital.
So basically, long-term capital has been going, but with the new, increased volumes, some working capital, will be there.
Will be there, but that will not be very material. It will be in line with our volumes.
Yeah, absolutely.
And with working capital days coming down, so that also should help reduce the working capital debt.
Yes, sir. Yes.
Okay. So lastly, just on the capex, absolute, any guidance for 26, 27, what type of capex outlay we are looking at?
Approximately 200 crores.
Each year, sir, or across both years?
For this year, for FY'26.
Okay. And then the 1 million ton extra, the incremental 1 million ton, that would entail a separate capex.
Yes, sir.
Sure, sure. Thank you, sir. All the best.
Thank you.
Thank you. The next question comes from the line of Mayank from Arabian Machinery and Heavy Equipment Company. Please go ahead. Mayank, please go ahead with your question and unmute yourself in case if you're on mute.
Yeah, thanks for the opportunity. This is Mayank from MSEC. So my first question is on this tariff thing. Just wanted to understand what kind of price tariff differential we have with respect to China if we export from India to US. Is there any number we have?
Yeah. Mayankji, as we know that, this is a continuously evolving situation. Every day, every week, these tariffs, which US is imposing, they are changing and they are being deferred or, they are being re-implemented. So it's quite a volatile situation right now. And simultaneously, you are already aware that the Indian government is pursuing the, bilateral trade agreement with US. So, and the China is also trying for some, trade deal, but it has not yet, been done as of now. So it's quite a volatile situation. We are, watching it. But right now, India definitely has an upper hand when it comes to exporting to the US market. So India would be perhaps, in the lowest band right now for the tariffs, because, they have imposed for Canada, Mexico, Korea, and other countries also.
So I'm just trying to understand the export opportunity which many players in this segment is trying to get hold of. What do you think about this next 2-3 years if this situation kind of prevails or the tariff uncertainty remains?
So export definitely is a very big opportunity, provided, all these trade deals and, these agreements, they are in place. India should be a, net exporter, of steel, products in FY'26. And, the market is big, especially, the American market. So we are, we are keeping a close watch on this and, hopefully, the numbers, should speak for itself.
Does that answer your question, Mayank?
I think his line is disconnected.
Hello?
Yes, does that answer your question, Mayank?
Yeah, that's fine. So my next question is on the product wise. I mean, if you could given a breakdown of your product by the thickness of the pipe, your market share probably would be helpful in terms of the thickness of the pipe that you sell.
So Mayank, it's a wide range of thickness we are operating in, starting from 1.1 mm and going up to 12 mm. So there is a market for every thickness depending on the size.
So we are leader in what kind of thickness? Because I think in the low, in one of the Concall you mentioned that the difference with the Patras price and the HRC price also depends on thickness what we are producing. So therefore, I'm just trying to understand the price gap with respect to your product.
So, so as I mentioned earlier, our market is quite different, where the approvals are required, the pipe has to be BIS and, it has to be widely available and, all the, 1500, 1600 SKUs should be there. So, but to give you the answer, our main range, is between 3 to 10 mm.
Okay, so 3 to 10 mm. And what would be your market share in this range? Any number?
Our market share, I think in this, will be approximately our total market share, which is about 8 to 9%.
Okay. Fine. And lastly, in terms of the interest expense next year, what kind of interest expense we should if you could give any number, FY'26?
So Mayank, I think largely it should be in the same range.
44-45 crore.
Yeah. Yeah.
Okay, sir. Thank you. That's it from me.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to Mr. Anish Bansal for his closing remarks.
Thank you all for your active participation today. FY'25 was a landmark year for Hi-Tech Pipe, defined by record-breaking revenues, exceptional profitability, and strategic milestones. Bolstered by strong momentum in infrastructure, defense, and clean energy, we are advancing decisively towards our 2 million ton capacity vision by FY'29. Your trust and partnership remain pivotal in our progress, and we are committed to driving sustained value creation through innovation and disciplined execution. We appreciate your continued confidence and look forward to sharing our next phase of growth. Stay well. Thank you.
Thank you, sir. Ladies and gentlemen, on behalf of Hi-Tech Pipes Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.